Okay, we make stuff happen. Someone's recording us now. Great. Anyways, my name is Josh, aka Don't Buy Real Estate. You just heard from Josh Answers. Say hi, Josh Answers. Everyone knows who you are.
Hello, hello.
And then we got Tyler, our beautiful moderator, who's wearing glasses. Are you hungover or something, Tyler? You got a hat on. You
My
got glasses.
my eye doctor forgot to order me new contacts, so I'm waiting on those to come in.
Tyler always got something going on
Is
over
that
there.
True.
Bono?
It's what?
Bono from YouTube.
Oh yeah, you kind of do look like him. I thought maybe you just got LASIK or something, but no.
Not
Tyler's not in the
yet.
mood today. He's not in the
Not
mood.
yet.
And to my left here, I have no idea what your name is. What's your last name?
Just met.
Yeah, Brandon. I know Brandon, but
Brandon Warnke.
Morkey?
Warnke. Like a
Warnke.
Warren Key.
Warren Key. Cool.
Yeah.
He's got all the puns. Brandon Warnke from Talimar Financial. He does, what do you do? Like, I want to say hard money loans, but you probably want to call it something else.
We're a private debt fund here in San Diego, and we do hard money loans. We do a lot of your standard fix and flip. We do some new construction. We do your bridge loans, and we do commercial bridge loans.
Oh, nice.
Just in California, mainly in San Diego.
Oh, just in California. So we just
Just
lost
California.
90% of our viewers here.
Just California, but
Why not all the other states?
Just the way our fund is set up, we're just
The way your bank account works, you got to
we're
check
the
in.
only lend
I've heard this before.
just West Coast.
West Coast.
Yeah.
Okay. And then just so we don't lose everyone, do you have connections for people in other states?
Yes,
Okay.
of course I do.
Good.
My background, I came from a hard money lending conference, so I know a lot of hard money lenders.
Perfect.
Pretty much all the legit players out there.
Okay. We're going to do things backwards. How do they reach you basically on Instagram, or what's the best way?
Instagram is great. It's a pretty wild handle. It's at Brandon from Talimar.
That's it?
That's it.
Underscores, nothing?
Brandon _from _Talimar.
Where was it taken, like without the underscores, or why do you have the underscores? Just to make it harder?
Just to
Hard money guy.
space it out.
Space it out. Okay. Yeah.
All one word, you can't really read it, I guess.
That's
Doesn't
true.
make sense.
Cool. So
And
that's how you find them.
Is Talimar the company?
Yeah, Talimar is the company.
Okay.
So funny story.
That's the name of the debt fund.
My first ever hard money loan, probably 10 years ago now, 8 to 10 years ago, was from Talimar. Not for, he wasn't there. He wasn't in the picture. But I had an escrow fall out. I called, what's his name? Brock, the owner. And I said, hey, man, I need a hard money loan. He's like, who are you? And I introduced myself. And he's like, send me this, this, and this. I did that within 24 hours back then.
Yep.
He sent me funds up to $850,000. He sent me in 24 hours, and he funded that loan pretty quickly. And then I refied it 2 weeks later,
Yeah,
and he
sounds
didn't
about right.
care. Yeah. So we'll talk more about that. But let's jump right into it. So these guys are all real estate agents, investors, wholesalers,
All nationwide.
all
guys.
nationwide. I think from Texas to Florida to New York to Tim's closet. Tim Whitman's always in the closet or something. So they're everywhere. What is the first step for these guys to kind of think about when they're looking at their first? Let's start with fix and flips. Fix and flip projects. What do they need to know, basically?
Fix and flip projects. Obviously, you need to find the deal. You need to have some cash in the bank. And then, depending on the lender, you need to have at least a heartbeat of a credit score. For us, it's 675.
That's not bad.
No, it's not bad. The reason being is because if you can't manage your debt, how are you going to manage a flip?
Yeah.
So heartbeat of a credit score, you're going to want to have your budget and scope of work and a realistic ARV. So a lot of
And ARV stands for after repair value.
Yeah.
So you can't just come in there with some random numbers.
Right.
So you underwrite the deals.
You can come in with a random number, but we're going to check you real quick. And if you've already submitted, if it's a wholesale deal and you've already submitted that EMD and it's non-refundable, and you think your ARV is 2 million and it ends up being 1.5, then you are gonna either lose that EMD or come in with a bunch more down.
Or find another source of funds.
Or
yeah.
Well, yeah. Or find a private money or
Yeah.
whatever the case is. You're gonna have to go on the hunt.
So let's talk. These guys are going to ask questions, and Josh, you can interrupt me too. I know you have a bunch of questions. But what you said, have some money down. What's the minimum required to get a hard money loan?
So we get a lot of, my niche right now is working with first-time investors.
Perfect.
So sounds like there's a lot of first-time investors out there. Usually it's 20% down, and we need to see 6 months worth of payments in the account.
6 months of payments in the
Yeah.
account. So if my payment is 2,500, say 2,000, because I can't do math, I need $12,000. No,
Yeah.
more,
something
yeah,
like that.
$12,000.
Let's say so your loan's going to be the typical structure is 80% of purchase, 100% of reno, and you're going to cap at 70 ARV.
Mm.
So you take 80% of purchase, you add up your reno, you take that number, and then you take 70% of ARV. As long as that number is equal to or less than, then you're good with 20% down.
Mm.
Now, if you add up those two numbers and it's over 70% ARV, then you have to come in with more money down to get to that 70% ARV requirement
Damn.
for first timers.
I should have gone to school. Well, that was that's a crazy equation. Can we type
that
that out for him
too-
and I can break it
It
down,
only
right?
took me 3 years to master.
3 years. That was pretty good. And you lost me in like 10
I
seconds.
figured.
But
Yeah.
we could recap that.
Once you get it, it's super simple. You can do the back of the napkin math in 5 seconds.
So you could email me that equation and then I'll post
of
it
course.
in the school.
Oh, yeah,
Cool.
super easy.
Perfect. So I'm doing loans right now. I do a lot of hard money loans for myself on projects and I'm getting 10% down. Why do I get 10% down compared to
Why do you get? Probably because you're an experience or you're getting that platinum level. So we
treatment?
do have better pricing once you get to 3 or more.
Mm.
Then you get 15% down. But it's all about the lender's risk tolerance. So there's bigger national lenders out there that are backed more by institutional type capital hedge funds.
Mhm.
The requirements might be a little bit more intense
Yeah.
to get that type of money. But private debt funds, they usually don't want to we're down to take risk, but we're not going to do your 95%
Yeah.
on the purchase.
Okay.
So it's just the reason being is we have a pool of investors that are out there. They're
Yeah.
always saying, "Hey, what are you guys lending on?"
Mm.
And they look at our balance sheet, and if they see that we're over leveraged on a bunch of properties, they may not invest with us,
Mm.
or they'll start pulling money out.
So that's how it works, right? You get a bunch of private guys who send you money and you promise them a rate of return, right?
Yeah, it's not promised, but we tell them. They always ask, "What's the average?" So like
Mm.
right now, the average is 9.5% annualized, which is pretty good.
Yeah.
I'm actually invested in the fund, so I put my money where my mouth is.
Wow.
Yeah, there's some tricky ways we can get into it if you want to invest. Not with us, but just with alternative investments altogether.
Yeah, that's cool.
Maybe we'll save that for later.
Yeah.
But yeah, we get a pool of investors right now. We have, I believe, over 200 people in the fund, and they give us money.
And then you
And we
deploy
lend
that
it
money.
out.
Yeah, but you underwrite the deals. You
We
make
all
sure
underwrite the deals in house.
Yeah.
We like to be at 70% or below ARV is the perfect scenario.
That's awesome.
Yeah.
So get the deals low is basically what he's saying, and he'll
Yeah,
lend to you.
or just come in. So if the deal is kind of wacky or more risky, or say it's out in Palm Springs or Cathedral City or Joshua Tree, doesn't mean we won't do the deal. Just the further away you get from home, the more down you're going to need.
Mm.
It's all about risk.
Yeah.
Risk tolerance. Rate will go up.
And then you said you give out 100% of the rehab costs. What is break that down? I know what it means, but the viewers might not.
Yeah. So rehab. So let's do 100,000. 100,000. You're going to break out into probably 7 or 8 phases. Now when you close, you're not going to get that 100,000 right when you close. You're going to be like, "Hey, Josh, like here's 100K, like go wild." You're going to complete, say, certain milestones of the project, and we're going to send you that money. We're going to wire it to you. So phase 1 is usually the simplest. It's demo.
Yeah.
Phase 2, framing, rough electrical, rough plumbing. Then you go your drywall, flooring, finishes. Once you're done with demo, you just take a quick video, fill out a draw request, and then we just wire it straight to you.
Wow.
There's no third-party inspector
No
coming
inspector,
out.
no nothing.
It doesn't drag out a week or maybe 2. It's literally 24 hours, assuming you do the video correctly. Now we get crazy guys trying to skip over rooms and stuff that's, they say is done is not done. Then you got to go back and say, "Hey man, like redo the video," and that takes another day or 2.
Yeah. So that was my biggest mistake on my first real flip when I borrowed the rehab money. I thought you would just have full access to the line of credit. Basically, that's what it is, right? A line of credit. And so I requested something, and they were like, "Well, you only did demo, so you can only get $6,000 worth of your draw."
Yeah.
And that set me back 2 or 3 weeks because I had to wait until these contractors caught up to where
And
I
then you
needed
had
to be.
to float it.
I had to float the cash, right? Which is you're always floating some sort of
Right.
cash.
How
So
much float can you
tolerate.
tolerate?
Well,
Yes.
yeah, but even so, like the main
You're the
thing though,
least
even
kid.
if, oh my bad, I don't know how loud that was, but
Yeah.
if you are taking out like, get 500,000 for the house and then 100,000 for rehab though, to complete those milestones, you need cash to do it. You have to
Right.
be able to have enough extra capital after the loan to get these things done. And then you guys pretty much, it's like a reimbursement, correct?
Yeah. Right.
Okay.
It's a reimbursement. So a good rule of thumb is for us, we like to see 6 months of payments in your account for liquidity.
Mm.
That way we know you can keep up with the monthly payments and you also have some working capital to get started
Okay.
with the demo.
And then, in terms of property type, what limitations do I have? Is it single family home and that's it, or can I do multifamily? Can I do 10
Yeah, you can do
units, or
multifamily. Yeah.
how high can I go?
However many doors you can fit in 5 million.
So 5 million is the max.
5 million is the max. I would say 3 million and below is the sweet spot for us. We
Okay.
can do 5 million, but since we're a balance sheet lender, we hold everything on the books. We are constantly getting payoffs, and then we're getting investor capital coming in,
Back.
and so we have to balance that with outgoing loans.
Yep.
So if we get a ton of like great loans all at once, we may not be able to fund them, or we might just need to push them back a week or two. Instead of a 4 or 5 day close, we push them back to 2 weeks or maybe even longer. So a $5 million loan would just, it might back up the pipeline a little bit, but we'll, as long as there's enough runway to kind of ramp up and get that money, make sure we're there and liquid enough for you, then we can do a big loan.
And that's a conversation, right, with some
Yeah.
investors that you have, like, hey, we can do it, but we need a couple weeks, right? A
Yeah,
couple more
we'll
weeks.
just be like, hey man, like 5 million is pretty big loan. Give us, how much time do we have? Like 30, 45 days? Because big loans like that, they don't close
Yeah.
in 5 days.
Yeah, yeah.
If they do, you got to be, you have to really pay attention to underwriting because the last thing you want to do is get stuck in a scam.
Yeah, funny story, Josh, the faceless guy. He wanted to buy Kanye West's house in Newport Beach or something, or Malibu.
Didn't that just close?
It just closed, but he wanted to buy it, and I was like, dude, I can't get a hard money loan for that. Like, I don't qualify. Like,
Yeah.
you don't qualify. Like, no one's going to qualify for that. And I called my hard money guy, not you at the time, and he just laughed at me. He just LOL'd. Good luck, basically. Only rich and famous people will buy that house. So
Yeah, I don't know. I saw that.
I'm the only one with vision, man. I'm the only one. I'm thinking here, man. I don't know. It's worth a shot. At least we tried. At least we tried.
we did try.
Think small, you are small, right?
Dang,
big,
bro,
you're big.
relax. You're just insulting everyone.
I'm saying.
So you guys ask any questions, raise your hand if you guys have any questions. Josh, any questions?
Yeah,
so far?
I got a
Okay.
great one because I get this one a lot, especially when it comes to like getting capital for a home. Because you said you need 6 months and you're gonna look through their balance sheet, but like, what if it is not reliable income? So in my case, for a lot of the people on the stream, like, what if you're a stock trader? What if you have no job, you're unemployed, but you have a very good trading account? For 6 months, 7 months, you got withdrawals and all that, and then they find a house in San Diego that they want to flip. Would you do a deal like that?
We would definitely take a look at it. We would probably just go more in depth into the statement, the history of that account.
Okay, but like, so it's not. Oh, so it's not out of the question though. So
No, it's not out of the question. The amount, maybe we'll only take 60 to 70% of that amount in
okay,
the account.
but you guys would
So we may not
entertain it.
consider. Yeah.
Okay,
We,
now what
we
if it
would
was
want to look. We'd want to look at the history of it though, just to see if you're losing a bunch of money all the time or.
What if they had one big TLT hit, right? That's what Josh is thinking.
Well,
Cash
yeah,
out.
that's another one too. But even then, I'm also thinking just like, what if it's a really good deal? So, because that's something I saw this one back in the day in like New York, and I always tell people, and a lot of people, they're like, no, you can't do that, and no, you need this and all that. And I know about like non-QM loans and all of that, but like, what if it was a really good deal? What if they came to you with 6 months of XML and it covers the cost, but this is like a property they have secured at 200 grand and it's worth 900,000. Is that, like I'm saying, you guys would entertain it, right?
Yeah, we'll entertain it. The main thing with us is we do not want to take back the property, so we just want to make sure you can keep up with the payments. That's really it. It can be the greatest deal in the world, but if you have no money to make the payments, like we don't want to do it.
Okay, That's
What if
great.
you partner with someone? Like if they came up to me and said, "Hey, I'll give you 20% equity, you just co-sign," you would do it then, right? Because I have.
We wouldn't be the partner, but yeah, you could be
Yeah.
if you want to be a silent. A good thing about us is we allow second position liens behind our lien. So if you have a capital partner like Josh, he wants to uh, be the gap funder. You want to fund 20% down and the interest carry. Great,
Do it.
we do it. You can either
Oh,
be a
that's
silent capital partner, or you can record a junior lien behind our lien.
You don't want to know about it, or you do?
No,
want
we
to know?
do. We don't
Okay.
care.
You don't
Yeah,
care.
it's actually more guarantors the better.
Yeah.
So we have 2 people guaranteeing that loan.
Nice.
So
Okay, cool.
I was going to
Yes.
say another follow-up question. What, because I don't know, I've seen bad situations and good ones, but like, what do you do in those instances where people can't make the payment? So, and have you ever had a loan like that where somebody got in over their head and like, what's the process and what happens in that case?
Yeah, it happens. I have not had one happen to me with Talimar, but it's only happened 3 times in the company history.
Just 3 times.
Yeah,
That's rare.
just three
right?
times. Yeah.
Well, that's
I mean,
probably
you guys
because
do
of a
pretty
result of
good, right?
underwriting, right? Like you guys have those, it seems like you
I don't
guys
know the
have
whole
standards.
story on them. One of them I think was fraud. Um, 2 was during COVID. That's the most recent one, and the other one I don't know about.
Wow.
But
I talked to my hard money guy. He's foreclosing on people like
yeah, we're rarely foreclosing.
left and right.
That's why we like to see credit,
Mm.
like decent credit, and we like to see that you have some reserves.
Yeah.
It's not that hard.
The one thing I like about it is he calls me and he goes, "Hey, my borrower defaulted and he's going into foreclosure. Do you want to buy it
Well, that's
at
good
this
too.
price?" And I look at it. So
Yeah.
that's kind of the benefit of getting foreclosures. But it seems like you guys are.
It's probably the lender shouldn't have lent to them in the first
Yeah,
place
sounds
because
like
he
it.
probably knew they were gonna be.
Well, the home didn't sell. 6 months on
Oh,
the
yeah.
market, just didn't
Yeah.
sell. The tenants stopped paying rent. Like he tried to do whatever he
Yeah.
could.
Man, before we foreclose, we go through every single option
Yeah.
to modify the loan, do whatever. Like that's the last thing I want to do is close and just foreclose. But if they can't make the payment, then yeah, you have to foreclose.
Yeah. How about someone's asking about interest rates? What are interest rates on a hard money loan? Does it vary?
What
Or...
do you think they are?
Ooh, that's a good question. They're all muted. So, Josh, what do you think the interest
What do you
rate
think
is?
the interest rates are
I mean,
for a
naturally, when
first
somebody
time
says,
flipper?
well, I usually just say $1, Bob. That seems to be the answer all the
That's not the
time. But
answer.
Hey,
I got
I
9
would
to 11.
I'm just curious what
I'd
people
11,
say
think before I
I'd say
answer.
like 10% right now, 10 to 11.
15%. We got 11, 12, 13.
Here in San Diego, they're 10.5.
Oh, that's
It's
not
pretty
terrible.
average.
Yeah.
There you
And
go, right there in the middle.
I'm sure everybody knows this, but they're interest only payments. A lot of people ask me, they're fully
Oh,
amortizing. No, we're not
that was
gonna
what I was going to ask you.
fully pay off the loan in a year.
What is the typical like loan duration? These aren't 30-year mortgages or 15-year mortgages, right? It's a 1 or 2 year, or how do you guys do
Yeah,
it
good
time frame
question.
wise?
So for a flip, it's going to be a 12-month term, no prepayment penalty. If you finish it in a month, great, pay us off. You're on to the next one. If you are coming on that month 12 and you are not even close to done, then we offer a 6-month extension option, but then you're in trouble.
What do you mean?
Not in trouble with us. You're in
You're in
trouble
trouble.
because you are taking way too long to do a flip.
Yeah.
You should be out
bigger
6
concern.
months.
Yeah.
How
I would say
you're
12 weeks, 12 days.
Yeah.
Depends on the market.
flip like done with the project by
Yeah.
week 3, 4, and then on the market
Yeah.
by right.
On
Yeah.
a good flip. Yeah.
That's why we like to see 6 months just in case.
Yeah.
That's a great number to
But
have.
keep that in mind though, because I know a lot of people think like a hard money loan is a mortgage, but like no, it's
Yeah.
a 1 year, 2 year loan max. So
Yeah,
don't
for a
forget that.
flip is 1 year. Now, when you get into bridge loans, say you have a development play where you are in Claremont and you can build 6 ADUs in the backyard. It takes probably a year to get permits for something like that. Then we could do an upfront 18-month bridge loan.
Can you break that down? I don't even know like how to explain a bridge loan. I just know how they work.
Bridge loan is just going up to 70% of the current value.
The current value.
And once you get your entitlements approved, then you can refinance into a construction loan. So it's just bridging that gap. But usually these type of properties are wholesale deals or distressed seller where they need to sell fast. So you got to acquire that property. You know,
Yeah.
that's
So I'll
pretty
pick your
much it.
brain about that one a little
Yeah.
bit more. We have a couple options
Yeah.
on that. Back to fix and flips, you said 12-month terms, 10.5%. What are the costs, right? Everyone says points. I don't know if we can explain what a point is for them. It's pretty simple, right?
Yeah, it's a percentage of the loan amount. So generally it's 1.5 points.
1.5 points for everyone, right? First timers,
First timers, yeah.
negotiable, non-negotiable?
We normally don't go lower than 1.5.
Don't.
Yeah.
Okay. Why not?
That's what we're worth. We feel that we're worth it. You know, charge more. People think you're worth it, which
Yes.
we are.
But like a guy who does 20 deals a year, you don't negotiate at all. If he's like, hey, this is costing too
Yeah,
much
we'll start to
look at.
once you get over, 3 to 5 deals, and yeah, we start negotiating pricing wise. But first time flippers normally pay 2,
Oh wow.
I would think.
Yeah.
But we do 1.5, 1.75,
Yeah.
depending on where it's at.
And then my next question is, do rates and costs fluctuate with the economy? So we see the 10-year treasury up. Did your rates adjust like a mortgage, like a 30-year conventional loan, or not really?
Not too much. We are tied to the 10-year treasury. I think we're about 5% over the 10-year treasury.
What's it at today, Josh? 4?
10-year right at 4.
4. So yeah.
Yeah, around there. So we don't fluctuate too much. But as we start to see, term sheets from other lenders, we do stay competitive. So we'll drop our rate if we have to.
Yeah.
People seem to think 10.5 is pretty good.
I personally don't care about the 10.5 because it's in and out, right?
Yeah, most people aren't too rate sensitive because it's such a short-term loan.
Yeah. It's the cost that kills me. A point and a half,
points,
a point,
yeah, everybody's
2, and then you got a lender fee, and then you guys sneak in a lot of other fees. Not sneak in, but they're there, right?
Some
What other
do.
fees do you have?
We have a 12.50 processing fee. For a flip, it's a 12.50 processing fee, 5.50 fund control fee, 3.50 service setup fee, and it's a 105 per draw. That's it.
So that's another $2,500.
Yeah.
Plus your 1.5%. And then there's title and escrow fees that you're paying
Your title
for,
and escrow.
recording fees in California.
Mhm.
I think that's basically it. But that adds up too. And for
Yep.
me, it sounds like it's about 25 grand per transaction in San Diego. Say on an $800,000 loan.
Could be something like that.
Yeah, it's about 30 grand.
1.5.
Yeah, total with title and
Yeah.
escrow. Usually I'm paying for the seller fees as well if it's like an off-market deal. That's kind of where it starts to add up for me on some of these deals, because I'll go seller direct, where maybe a wholesaler will negotiate where the seller pays all fees, maybe, but usually I get them where it's all seller paid.
On wholesale deals, we can work assignment fees into the loan. There's no
Oh, that's
cap.
big.
Yeah.
No cap.
No cap at all.
With a no cap.
I think the biggest one we've seen is 340.
$340,000.
Yeah.
Was that the one at Rancho Santa Fe? Or you can't?
That was the
disclose?
assignment fee?
That was the assignment fee.
Oh, it's
Wow.
Rancho Santa Fe. I think I know who that was.
I don't know if it was Rancho Santa Fe.
Okay, maybe not. But that's good that you could work that in. I haven't seen
I have
any
to remember.
lender
Yeah.
able to do that.
That's one good thing about being a private debt fund. The rules
Change.
we make up our own rules.
Cool.
There's still rules, but
Yeah.
they're not as stringent as the kind of capital big hedge fund guys out
Yeah,
there.
big hedge guys in like a conventional
Thanks.
bank. I see Randa in here. She's like a typical lender, right? Loan
Right.
officer.
Mhm.
There's no 3-day waits. There's no right of rescission. There's no loan
Yeah.
estimates. This is a business purpose loan.
Business
on a
purpose
property.
commercial loan, and we're not beholden to TILA or RESPA.
Yeah.
No
Those some of the regulations.
stuff like that.
Do you
Regulations.
need a LLC or can you just do this in your personal name?
LLC is always preferred, but you can do an individual.
Okay.
No biggie.
And why LLC? Why is it preferred?
LLC.
Wouldn't it be more riskier for you guys, or? It's a good question. You don't have to answer it.
No, I mean it's just
Just get a
it
personal
just
back.
proves that it's more of a business purpose type loan,
Okay.
commercial. And then I think it's more for you, the borrower,
To
because
protect, yeah.
if you do default, then you're just gonna lose what's in the LLC
Which is
to
nothing,
start. But then you sign a personal guarantee, so
Hey,
you still go
lose,
after the loan.
lose.
Yeah, just don't default.
Yeah. Any I'm gonna shift to construction, but you guys have any questions? I can't read that. I'm 40 and my eyesight's dwindling, and I had LASIK. So it's can you read that to me, Jason?
Because I got my hard money lender down to 5% interest, 2% organization fee covers all closing costs.
You got your hard money guy down to 5%. Are you just capping right now,
Oh,
Jason?
bullshit.
There's no money taken, interest just gets
Well,
Did I say
make sure
happy?
you don't share that with anybody.
No, share it with me right now.
'Cause-
Email me because that's a really good deal. It had to be a private lender, right? Some guy you met on the streets.
What does it say?
I can't tell, man. My eyes are shot, bright
He
lights.
said, "Nah, dude."
Nah, dude, it's real. Yeah, DM me that guy's info. Any other questions you guys got? I know you guys got lots of questions. Because I'm gonna shift. I'm gonna go fast. If you guys don't ask questions, I'm moving. We got
I
30
want
more minutes.
construction.
Oh, here we go. Go ahead, Lauren.
I'm waiting for construction.
Sorry, you're waiting for
Okay.
construction. Okay, we'll
All
talk
right.
about that next.
So,
Anybody else? Hard money loans, first time home buyers,
Everybody knows
flippers. They're just shy. They get really shy when
Do
I'm
you have
asking for it.
connections to buy like properties outside the US? Because normally the interests are like higher.
no.
No. I've
No?
seen people buy homes in Mexico. Like, where do they get loans for in Mexico? Like in Mexico?
Shit, I don't know. Tell
Yeah,
me.
It's crazy.
I'll do another podcast on that.
Yeah. Out of state loans. So no, man.
Out of
he doesn't
country
know.
loans.
Out of country, yeah. Yeah.
I got a question.
Okay, go ahead.
Hey, I'm out in Chicago. Do you have any recommendations for or know any people that do hard money lending out here?
I do. Do you?
Chicago? Yeah.
Yeah. Yeah. DM both of us.
We're not gonna give him a free plug though.
No plugs.
Yeah.
I give out free plugs all the time, bro.
Go for it.
Yeah.
Who do
I'm
you
not
use?
gonna do it now.
Oh.
DM me and I'll text it to you
Let me
on
see.
Instagram.
I
And
need-
DM him
I
too.
need,
He might have a different
Lita
guy.
needs Padre tickets.
Padre tickets. Yeah, poor
No,
Padres. Season's over though. So
Next year.
Next year. He wants Padre. This guy is a tough guest. He wants. All right, who's up next? Spencer,
What was the
loan to value. I think we went over that. You want
It's either
20% down.
depending. It's experience based, so 80 to 85% LTV, 100% reno, cap at 70-75 AR LTV
And-
after repair loan to value.
and he's going to give me that equation, so I'll post it in school
Yeah.
for you guys, so you guys can just use that as a quick
Yeah.
reference.
Um,
All right, anyone else? I'm going to go to construction.
Yeah, I know you guys are out there shopping lenders and trying to get with the good lenders. Just make sure you go over the draw process with these guys because you don't want to get stuck having to float
Yeah.
a bunch of money waiting for the next draw. So just
So
I would really drill down on that
Yeah.
when I'm interviewing a lender.
Who said
can I
that?
ask another question?
You're maxed at one, but
Mich-
go ahead. I'll make you.
Mhm.
Oh, my bad. So everybody gets one. So earlier in the conversation, your mic was down. Could you go over that map that you were looking for again? Because you said you wanted to be
Okay.
within 70% of the ARV, and then you said 20% down, and then I also heard you usually look for about 6 months worth of payments in account already. And so but I didn't hear the math on the 70% ARV.
You want to write it out? You have
And,
good handwriting?
I don't.
He's going to write it out. Okay.
So you
real
take
quick.
your
Okay,
purchase
go ahead.
price, and
Uh-huh.
so your loan amount's going to be one of two numbers. It's going to be the lower of the two. So your loan's going to be 80% of purchase plus reno. You got to get that number first, and then you'll take 70% of your ARV, whatever that number is. So if you take 80% of purchase plus the reno, and it's equal to or less than 70% of that after repair value, then
I got it.
then that's 20% down. Now, if you take 80% of purchase plus reno and it's above 70% of the ARV, then you'll still be able to do the deal. It just means you have more money to come down with to get back to that 70% requirement. It's going to depend on the lender. Some will go 75, but you usually need more experience.
All right,
Like
we're
I'm
gonna-
sure Josh can go 75.
Yeah, I'm sure I can go 90, bro.
But then you're not
Andy's
making
gonna
any
write it
money.
out and I'll take a picture and post it. So let's give him a real life. Is your handwriting good?
Fine.
Okay, good enough. So let's use a purchase price of 300,000.
Let's do $1 million because it's easy.
Okay, let's do $1 million. I like it.
And then so purchase price, what's the reno and what's the ARV?
1 million. The reno would be 150,000. Right?
Yeah, that
150
sounds
grand.
good.
Yeah.
And then what's your ARV?
ARV would be 1.6.
Okay.
That's
So
realistic.
what's 70% of 1.6?
You have a calculator?
Yeah.
He's got a calculator.
It's 1.12 million.
70% of, so you use the ARV, 70% of that is 1.12.
Yeah.
0.12
Million.
million.
Okay.
Okay.
So let's take 1,000,000, which is 700. Sorry, 1,000,000. 20% down is 800,
So
and then we add 150,
20% down.
and that's 950,000.
So 950 is the max.
So 20% of 1,000,000 equals 800.
It's good math.
And you add 150
to the 800
plus 150
for your rehab.
Yep.
Okay.
Your rehab. So yeah, plus rehab. That equals 950,000.
Equals 950.
So in this case, you're well under 70 ARV. So that's your loan amount.
So 950 is my loan
Is your
amount.
loan amount.
So I only have to bring in 50,000 down. Is that what
You
you're
only
saying?
have to bring in 20% down of the purchase price.
Oh, so 20% down
Yeah.
of the $1 million. So $200,000 basically is what I need in for rehab and down payment.
Yeah, you just need 200,000. Yep.
And closing costs would be a little bit more.
And 6 months reserves. Now let's try another scenario where let's say the rehab is 400,000.
Okay.
So
change that.
So
second
800.
line.
Just do another one.
Okay.
So purchase price 1,000,000.
Very intense for Hannah.
Yeah. It's all right.
It's the most work he's done all day.
1,000,000. Reno 400. It's a big reno. Big reno, your first time flippers. Let's say your ARV is the same at 1.6.
And I don't know if y'all know this or not, but we can't see what you're writing.
Yeah, we're gonna show you.
Okay.
Don't worry. He's gonna move the camera eventually, or I'll move this.
So we got 70% of 1.6 is 1.12, but so you got your 1.12 million, which is 70% of 1.6, 1.12. So you take your 800, so that's 20% of purchase plus 400. Yeah. So now that equals 1.2 million. So you're over 70 ARV by a little bit. So does that make sense? So now you have to come in with more money down to get back to that 1.12.
So you're
Yeah.
bringing in 20% plus whatever you need to come in at.
Yeah, to come in with to get back into 70%. You just got to put more money down on the purchase.
Hey, can you take a picture of that so I can post it in
Does that
screen?
make sense, everybody? Yeah. Sort
Makes
of.
enough sense. I think they'll have more questions and we'll message you.
Well, I would say, how universal is this? So is this just for you guys, or like, can you do this and could you say you could apply this to almost any hard money lender?
This is usually every hard money lender because they're going to cap at 70% of purchase or 75. Just depends on the lender. So you just got to find out your loan amount. 80% of purchase or 85 or 90. And then if you add your reno and that's over 75 ARV, then a lot of hard money lenders are like, oh, it's 10% down, but they're going to cap at 75 ARV.
You know.
So a lot of those deals, depending on where you're at, in San Diego, they probably don't pencil. They might, unless you're getting the property at a steal. So you just got to be wary. You got to do the math real quick.
Yeah. Cool.
So,
can you move this so I can be more comfortable here?
Hopefully that helps.
We'll post it in the class too, and then I'll post it on Instagram. If you guys have any questions, we'll reach out to them. But let's shift gear. Any questions on that? 3 seconds, 2 seconds, 1 second. I want to talk about construction. So let's just say I have a plot of land. I got it off market, steal of a deal. You do construction loans, obviously. What's that process like? Walk us through the entire kind of A to Z. Let's just say I want to purchase a vacant piece of land. Do you fund that?
It's rare. Well, we have funded land in the past. It is rare. We're very selective on land. It has to be. Do you know the term infill lot?
Infill,
I'm sure
yes.
you do, right?
Yes.
Infill lot is a lot between two buildings.
Okay.
So in a core urban area, not North Park, something like that. Yeah, in that case, we'll take a solid look at it. We'll fund probably 50% of the purchase for the land. So you need to come in with 50% down. Now, when you're ready for your construction loan, as soon as you get that land, you're going to submit for your entitlements and your permits.
Yep.
Once your permits are RTI, ready to issue, then we could modify that loan into a construction loan.
Okay.
And then in our case, we just charge you points on the new money.
The new money.
So if you bought a land for 500,000, we're gonna charge you the whatever one and a half
Yep.
up front, and say your build is gonna be $1 million. We're just gonna charge you points on the $1 million. You'll still pay interest on the total loan amount, but you
Yeah.
technically get credited
Yeah.
from the 500.
And so what do you guys look at? You look at the permits, or what are you basing everything off? Is it the same formula?
It's similar, just not as high leverage. So you'll go up to 65% ARV. Construction loans, it's usually industry standard to have a payment reserve. So if you're telling me it's going to take you 12 months to build it and exit, then we'll build in a 12-month payment reserve.
So explain that. So that's payments on the new money or the total
That's
loan.
the total loan amount.
Okay.
It's usually, so for construction, we like to see experience. We can still do a loan for non-experience. It's just going to be a lot more expensive. So there's probably better options out there.
Yeah.
But assuming you have experience, it'll be a payment reserve at 70% of the outstanding loan balance. And so you'll have 12 months of payments worked into the loan. Once you burn through those payments, then you have to start making payments out of pocket.
Ooh, that's when it gets tricky.
Yeah.
Uh,
That math's a little bit harder because
yeah.
you just need kind of everything in front of you. But you would take 65% ARV, subtract your build cost, and subtract your payment reserve, and the remainder of that would go towards purchase or payoff. Usually it's a refi.
Yeah. So let's real life situation. I have a client right now. He has a vacant piece of land. He already bought it. He wants to start construction on it. He's getting permits ready probably next week. He should call you now, right? And say,
Yeah.
hey, I just got my permits issued, or I'm getting them next week. Let's get that process started. He says his build is about 380, I think. It's a single family home in Spring Valley.
Okay.
In between two homes, so we're good there.
Yeah.
What does he need to know about that? So 380 build out. He already owns the land, free and clear
380 build out. We'll need to get an appraisal on it, and
on
then
the land.
on the finished product. Well, we'll get a as is and ARV appraisal.
Okay.
You can get appraisals based off of future value
Okay.
for people that didn't know that.
Yeah.
And then we would just kind of work backwards into that.
Okay. So let's just say the appraisal comes in at 800,000.
800,000. So
Yeah.
we'll go up to 65% of that.
65% of that. And you'll give them a line of credit basically for that?
No, it's the same thing. It's milestones. So once, trenching's done, you submit for a draw. Once foundation's poured, you submit for a draw, you get it. Once you do your framing, your nail inspection, all that stuff.
Oh, wow.
And
So you're still paying out of pocket for some of this stuff, right?
you're still paying interest. You have to pay for your contractors. You have to pay for your contractors, yeah.
Yeah.
And then you'll get reimbursed.
But then when you get reimbursed, you're paying interest on the.
Yeah, you'll be paying interest on. Yeah, you'll be paying interest on as the loan amount gets bigger. It'll be coming out of the payment reserve though.
Yeah. Okay.
So you're not going to be.
Matter.
You should be okay.
Yeah.
But you're going to want to, for ground up construction, you're probably going to want to have 5 to 10% of the loan amount as reserves, just in case you run into cost overruns or some snags.
Yeah, for sure.
I would, but
and
the lender should check for that too.
So he doesn't have to put a down payment down, right, on that, since he already owns it.
It sounds like he might not have to, yeah.
Okay.
But some people that are over leveraged on some of the initial purchase on the initial bridge or whatever the loan they got into, they may have to come in with cash.
Awesome.
Yeah.
So I could just have him call you direct, or I'll work it through me or something.
Yeah.
But
we work with brokers, so
perfect.
You just broker it.
That's another topic for another day. Okay, so I got my permits. You're sending me money. It sounds like there's a draw stage based on milestones.
Yeah, before we close, you'll have a draw schedule that lender and borrower agrees upon.
Okay. And contractor apparently, or no? Contractor,
yeah. Contractor will get in it
and
too.
does he have to be licensed
good idea.
contractor, or how do you?
For ground up, yes, but for flips, I
Yeah,
mean, everybody uses subs. Yeah, so that's fine.
But for ground up, you want to see this guy's license, and
yeah, we need a signed contractor agreement.
Okay. Wow.
Yeah.
What does that look like? If he screws up, he's liable, or?
We just need to make sure he's insured and bonded. If he screws up, then that's the borrower. It sounds like that's the borrower's problem,
Okay.
But-
And then let's just say 12 months later, the house is done.
Yeah.
You're paying interest you're paying a payment right after it's completed, or when do you kind of convert that into a conventional
We
loan?
can
or
convert
just-
it. Well, we wouldn't do conventional because we're just
Yeah, yeah.
we could do a DSCR loan, or if you're brokering it, you can
Yeah,
do
yeah.
the DSCR
Okay.
loan. Yeah. As soon as it's done, you have the certificate of occupancy, then you can go for your refi
Cool.
for either conventional or DSCR. Or...
Why does it seem so easy? That you made it seem way too easy. There's no, I mean,
It
besides
really is.
construction,
Yeah.
I think the financing sounds really easy.
It really is that easy.
Yeah.
You just need you do need to be semi-liquid. And you can't be broke and trying to get a hard money loan.
Yeah.
You need to have 20% down, 6 months reserves. If you have more, great. So
Yeah.
ground up construction, you need experience, or you need to partner with somebody with experience.
This guy has no experience. I mean, this is his first ground up. Well, he's done flips and stuff in the past. Do you look at that differently?
Why is he going hard money?
Doesn't have cash to.
Is it too debt to income's too high?
Just doesn't have the. Where else can you get a loan for construction? Construction loan? A bank maybe?
I would start there.
Cheaper?
Yeah, for sure.
Oh, really?
For construction.
More. It sounds like
more
paperwork.
requirements.
Yeah, yeah.
But I mean,
we don't like requirements.
I know.
We just want to get.
We always ask the question though, because you'll get a dream borrower, 800 credit, a bunch of money in the bank. Why are they going hard money?
It's time.
Well, they got 2 weeks, 3 weeks to close. I mean, that's enough for a conventional.
Yeah.
We just need to ask the question like, why go hard money? Just
I don't like going to banks like at all.
People don't.
There's just too many loopholes, and
usually it's debt to income. There's too much debt to income.
Yeah.
Or the property you can't. The bank won't lend on it because it's too run down.
Yeah, this guy's clean. Like he's got money in the bank. Shorty, what you drank? He's got everything. Like he's fine, but he doesn't want to go through a bank. He doesn't like the institutions because they're gonna ask for stuff. Like they're gonna ask for tax returns, and he doesn't mind providing it, but he has several businesses, and it's gonna become more tedious than it is.
Yeah,
fun.
We could definitely do it.
Yeah, cool.
I mean, that sounds pretty simple.
Yeah, and you need to see plans, permits.
Yeah, you need a copy of the plans.
Okay.
Permits need to be ready to issue. You have to pay all your fees, your school, electrical, or sewer fees, whatever.
Yeah, that stuff adds
up.
Yeah.
Permits can be reimbursed.
Permits and school fees and all that stuff.
Not school fees, but architectural fees.
Oh, cool.
Yeah,
that's good to know.
Yeah,
I didn't know that.
Some soft costs.
Nice.
But
and you have a list of soft costs you can send me?
I can get it for you.
Yeah, perfect. All right, Lauren, you're up. What questions you got? No pressure.
Construction. So for ADUs, this is the biggest one for us is we have clients that want to fund or build ADUs, but then they kind of get in trouble, not in trouble, like they get stuck with financing. For example, they don't want to touch their 2%, 3% rate. They have equity. What do you say about that?
Before he answers, we have a 5-day HELOC wherever Randa is. Email Randa. She has a 5-day HELOC. Do it later. But Brandon, you have an answer. Don't try to steal
Those
my
are
business here.
the golden handcuffs.
Yep, that's what they call them.
So we don't. Unfortunately, it's a primary residence, so we can't land on that.
Oh,
if it was a rental, we could.
Okay.
If it was an investment property, we could, but we don't do seconds. We only do first positions. So,
okay.
So that would be
you're
screwed
getting
either
all
way.
my second lien business now.
Yeah, we have a
I get that
HELOC
question all the
with
time.
investment properties too. 5-day HELOC. The rate was 9%, but the debt to income the LTV was super low. It was like 60%, which is rare for a lot of people. But we can go up to 80% loan to value. But the rate I think is 10%, 10.5. It's just like a hard money loan at that point. With cheaper fees. So that's another way to
If you get a hard money second though, say you did find somebody to do a hard money second, you're paying 12 plus for a hard money second.
Yeah.
So I mean that's a good option.
And it's interest only, I'm guessing.
Interest only. Yeah.
So you don't do any ADU stuff because it's typically primary residence.
We can do ADU stuff as long as we're in first position and it's a non-owner occupied investment property.
Which is never gonna happen.
It happens.
It happens.
Yeah. We did we're funding one in college area, Rolando Park. It's 8-unit. The guy bought it. It was an Airbnb. Found out he could build 14 units. Turns out he wanted to build 8, and so made it happen. Maybe
And so
another
you
60
funded the
units.
whole loan, basically.
That one he came to us because he had an existing hard money loan on it,
Hmm.
and
you paid that off, and then
we
gave him.
paid. Yeah, he paid that off. He had to come in with a little bit of cash,
Mhm.
but for his say 30,000, he got $1 million build
Wow.
budget financed.
That's awesome.
Yeah,
Good for
and
him.
payments worked in.
Yeah, so he no payments.
He doesn't have to until he exhausts that payment reserve, but he's still got a good amount of time.
Well, I didn't even think about that. So there's options on the
Yeah.
investment property world, like
Investment property. Yeah,
There's-
those are the scenarios we love.
yeah,
Existing structure with plans and permits for, 2 to 8 ADUs,
Yeah.
whatever you can fit, 3 million or under.
So
We're your
my other
guy
client
for
has
that.
sorry to cut you off, but he has a Claremont house. You could build 7 units on that. His
Mhm.
goal is to rehab it, rent it out, and then go get
Yeah,
another loan.
there
That
you
would be the play to go, right? He would cash flow.
That's a great play.
Yeah, and then he would have the permits already and then start building whenever he wanted.
Then let's do it.
Yeah.
Broker
Wow.
that through us.
That's awesome.
But we get a great scenario is the fix and hold to construction loan. So just like you
Yeah.
said, 85, 15 to 20% down on the purchase. We cover the reno for the existing structure. As soon as they get in there, submit plans and permits for however many ADUs. Once you're done with the reno, you obviously that's going to service some of the debt while you're waiting
Yeah.
for the plans and permits. Once the plans and permits are approved, then you just get charged points on the new money.
Hmm.
So that's a solid option
Yeah.
for those.
Yeah, you just unlock like a new cheat code. That's cool.
Yeah.
I could use that for sure with these
Yeah,
clients.
yeah.
Lauren, does that help at all? I know you have more questions.
That is it for now. It's mostly
Lauren
the
works on Jeff Disher's team. You know
I do.
Jeff Disher?
I've heard of him, yeah.
Yeah.
I think I cold call him and he hung up on me.
He's a tough guy. He's pretty mean.
I think he was the first year I was in the business. I remember calling him.
What'd you say? You asked him for coffee or something? He doesn't do coffee.
No, I think he asked me, "Do you do 90, 100?" And I said, "No."
And then he hung up on you?
Probably. I think
That's
so.
dope. That's gangster. But yeah, Lauren's like the complete opposite, unless you piss her off. So you should be good with that. Thanks, Lauren.
Thank you.
Any other questions? We have questions on the screen. Go ahead, Jason. Ask one real quick. Jason was sleeping, bro.
Hey, Brandon, can I ask you guys a question about the draw process?
Yeah.
So just can you clarify? So like, let's say you're doing I don't know, a fix and flip, and then the contractor needs the money and you ask for a draw. So does the draw go into process and then you pay the contractor, or is that something that we're responsible for paying and then we get the money refunded back? How does that work?
So as long as the phase is done that you're submitting a draw for, we wire it straight to you. But if your contractor needs money up front, then you have to pay the deposit. We won't reimburse for deposits. We only reimburse for items for phases that are 100% done. So
Got it.
If you have flooring, a good example is flooring or even appliances. Appliance will be sitting there. Flooring material will be sitting there, but it won't be installed. Then, what happens if you take that flooring and just walk away and go to another project?
Yeah.
So we have to
That
make
was
sure
my
there's-
biggest mistake on my first deal. I thought you would just reimburse it for the purchases that we
Yeah,
made. I
it's-
submitted receipts and pictures, and they were like, "Dude, it's not installed."
Yeah.
And I was like, "What?" And then, we were stuck floating a lot of
Yeah.
money until the contractors caught up, basically, which is scary. But now I'm smart. My contractor, I tell him, I'm transparent with him. I'm like, "Hey, I don't get money until you finish a stage. So finish it, invoice me, and I'll pay you within 2 days." And he's well capitalized, so he's not worried about floating that 25, 30 grand up front for 2 weeks. So that helps me out. So I'm doing these deals pretty effectively now.
You obviously want to build your relationships with your contractors sooner rather than later.
Yeah.
And just set expectations up front. Make sure you have some reserves. So
Yeah.
maybe
Does that answer the question, Kiki? Is it Kiki? Kaiki? I think it's Kiki.
Take that as a yes.
Yep. All right.
Someone asked,
Okay.
does this only work for homes? He's asking about funding for a laundromat.
Business.
We would do a bridge loan on a laundromat. We wouldn't do like a fix and flip for a laundromat.
Xavier always has something up his sleeve. Well, a laundromat. This guy last week or 2 weeks ago said he bought a house for $1, I think it was. This guy is the ultimate hustler. I love this guy.
Yeah, laundromats make money. It's cash.
I don't know. Can you go off mute? What are you trying to buy a laundromat for? Like, I need you to move to San Diego.
Laundromat would be a commercial loan, so we'd probably go like 60, 65 LTV. So that's more of just down payment
Yeah.
you'll need, which is pretty standard.
Okay.
Unless you go, say, a business loan like SBA or something like that.
That's interesting though. So you would do a laundromat? Like, what do you mean? Though you would give him the money to buy the laundromat and would expect him to refinance it, or what
Yeah,
would be
so
the
say he
plan?
wanted to buy a laundromat, and he's gonna need probably 35 to 40% down. If we did a bridge loan on a laundromat, that would allow him to acquire the property and to exit that loan. Usually those takeout lenders need to see historicals on the financials. So they need to see that you're earning this consistent whatever, 100K or 50,000 a year, whatever. I don't know
Yeah. How many?
what their
quarters?
requirements are. So once you build those financials, once that T12, that trailing 12 starts to look good, then you can go get that long-term takeout financing and pay off the hard money bridge loan.
Hey, Jason, so real quick, I got a question. So I'm in the process literally of getting a laundromat started. But we couldn't get financing hard money from anybody because we didn't have an established business, but we can come up with 20%. But right now we were able to finally work a deal with the actual owner of the building to say, hey, look, I'll finance it for you guys. Give me the 20%, but until the loan is paid off, you're paying off I'm taking half of the profits until the loan is paid off, basically. Is that something that maybe you guys can, I don't know, do better with, or
So if they wanted to,
it's a
let me just
$200,000. $200,000 is the total budget. So $200,000 is what we need. We got 30K that we can put down, which is what we're putting down, and then the owner is
and then the
financing the rest.
seller wants to carry. Seller carry. So if the seller wants to carry in the second position and our loan would be in the first position, you could take a look at it. It's not unrealistic.
What state is it in?
Michigan.
Oh, okay.
Yeah, I mean, we wouldn't do it, but if you need to, so for something like that, we only do California. For something like
Okay.
that, you're gonna want to hit the local networking groups and just find out who the private money guys are out there, and just
So it sounds like it's doable. So
it's doable. If the seller is willing to be in second, and the hard money lender can be in first, he's still gonna have to come in with some money down.
Yeah.
But you said you had 20% maybe, and then the
Yeah,
seller
we're
doesn't have
doing
20%.
yeah, we're doing $30,000
We would do
down on
it. We would look at it.
I
Yeah.
want 10% of returns. Okay, Xavier. All
I got
quarters.
you, bro. Come work.
All right, cool. I like it. Good question. Good
Yeah,
answer.
good question.
We have 3 more minutes. Josh, any final questions? Crew, any final questions?
Can I ask one?
Yeah,
go ahead.
I'll let Donovan go here in a second, but with all of these answers, I feel like I'm Kanye right now. I'm like, I'm gonna let you speak, but the thing I'm wondering is like, where do so many people get this idea that a lot of things aren't possible? So even asking you about the trading, laundromats, hearing about the loans, like how would you say you stack up like nationally compared to people who are like, if somebody was going to be calling in other areas, how many calls is it going to take to meet your company? Somebody like you, would you say?
Well,
That's a good question.
I don't know.
Dang, coming in hot with 1 minute left at the buzzer.
No, because it's impressive though. Like I'm telling you, I'm gonna be talking about this on stream tomorrow, just because so many people, you have no idea. Where like I've told this to a lot of people and all sorts of things from the trading, down payments, and now I'm even blown away by the damn laundromat. But like this, but where do people get this idea that the capital is so inaccessible? And I guess again,
I don't know.
how many calls to find you?
I just think people don't know about. I feel like we're the best. The next best thing to private money, like private money, is maybe a family member or friend, like a handshake type deal. But a debt fund is very similar to that. A little bit more requirements.
What's my hard money guy? He's not a debt. Is he?
No, I think he's a
brokers.
trustee or he brokers.
He
Yeah.
brokers.
So that might be the answer then. Maybe people should be looking for debt funds
Yeah,
to
debt
get these
funds.
loans
Debt
rather
funds,
than your
so
hard money.
it just depends. Because these bigger national lenders, their requirements can be a little bit more intense. They're more like soft money.
Yeah.
The true hard money guys are private debt funds where they have complete control over the capital. So there's no third party that we need to get approval for. And there's no bank committee that needs to approve our funds. So
Yeah.
if you can get out there and connect with private debt funds, I mean, I would.
And if you have
It's
access,
great.
the way I do it is I honestly look at houses that were sold off market or on market. I pull the title profile, and some of the deals say Talimar Financial on them,
Yeah.
right? As the fund,
Yeah.
as the lender. So you guys, if you're real estate agents or have access to a title report, pull the preliminary title report or a generic title report. It tells you who the mortgage holder is. That's the bank you want to call. It could say Wells Fargo. Obviously, you skip that, right? You know that's not hard money. But if it says a random company that you've never heard of, Google it. If it says it's a fund like yours, that's probably the hint, right? The
I mean,
fastest way to find out.
Yeah. And not all of them are out there marketing like
But
crazy.
you're on Instagram. I mean,
I'm on Instagram,
yeah,
but
that's how I found you.
for Michigan, you're gonna need to go to local meetups and just kind of see who's doing what out there, who the players are, who's funding what.
Yeah.
You know,
I think I could find one in Michigan online if I didn't have any connections.
you probably could.
On Instagram, some Chaldean
just gotta
guy,
look for
something,
it.
bro. You'll find something.
Yeah.
It's a lot.
I
They're
do
not
have
always the cheapest, but they're the most flexible.
Yeah.
Like I think.
Go ahead, Lauren. You got mine.
question for everybody who's, doing it for their first time. How do they make sure? Well, do you take private money lenders too, right? You'll take us like investors who want to invest and give you like 50,000, here you go, like
Sorta. There's some rules to that. You have to be accredited investor.
okay.
So, which means you have to have $1 million net worth excluding your primary, or you have to be making, I think, 250,000 a year consistently. Or I think if it's a household, it's 300,000.
What if you invest in stocks? Like, I think that's one of it too. Like, if you have a net worth of whatever in your stock account.
Yeah.
Yeah.
I think it'll work.
Yeah. Cool.
Yeah.
Thanks for that question. Who was that next person? Last question that Josh cut off?
Donovan.
Donovan, go ahead.
Yeah. On the new construction, question on how to figure out how much it would cost to do a new construction. In an area where land is cheap, homes, once they're newly built, sell for about 470, 500 here in California. But trying to figure out, okay, well, what would it cost? Like, how much could I actually profit by flipping? How would you figure out the cost of building? Like, I found out what it costs from the permits, hooking up to sewer, electricity, all those different things. But there's some things like, well, I don't know how to price out like electricity or water or those kind or appliances or different things. I don't know if that's a question for the next session.
Yeah. I mean, it's a great question. But that's going to be more directed costs as your contractor and architect. Feasibility.
What state are you in?
What
California.
state?
What city specifically?
Let's see, north of Santa Rosa.
North of Santa Rosa, you're probably looking at $420 a square foot. Say $400 a square foot to be safe. And then just multiply that by how many square feet you want to build or allowed to build. But yeah, feasibility study. If you call, what's our boy's name? CJ at Lifehouse. He probably has a guy up there that you could contact for a study. That'll
Okay.
tell you what you can build, how many square footage you could build, and you multiply it by 420. But call a contractor too up there.
Contractor,
architect, and see exactly what the build out would cost.
Yeah.
Okay. Thanks.
All right. Good question.
Yeah.
All right. So that's it for time. We're at 5:00. I know you guys got another meeting. Thank you again for joining us. Instagram handle once again. I know it's super long and lots of underscores. So
At Brandon from Talimar. There's underscores in between Brandon and after from.
perfect. Yeah, I posted them in my story, so you could just go to my story and then tap on it.
Yeah,
so you
reach
don't have
out.
to-
Let's connect. If you have any questions at all, any wild scenarios, if I can't do it, I'll definitely point you in the right direction.
Yeah,
For
cool.
sure.
All right, Josh, anything else? Any final answers, questions?
Nah, that's it, man. That was a great call with a lot of info. I really
Nice.
appreciate it. Thank you.
All right, cool.
Yeah.
Yeah, you're
Thank
welcome.
you guys for joining us. We'll see you guys in 2 weeks. Peace.
3 weeks actually. 2 weeks we got a big event, so we'll be back in 3 weeks. That's November 6th.
3 weeks. Thanks for the memo. There.
Yeah,
It's already
y'all get to
November?
enjoy an extra week off.
Maybe we'll do it next week. What do you guys got next week?
I mean, if you want to do next week, we can do next week. Sure.
I don't think I can wait 3 weeks without you, Tyler.
Okay.
Hey.
Wait, is everyone still on here? Oh, my bad. All right, guys. We'll see you maybe next week.
This was one of
We'll see
the
you next
best ones I've been at. I'm not gonna lie, I love all the
We'll see you guys, and team, I'll see you in a minute.
All right, later.